What is going on, investors? Hopefully, you guys are doing well out there. Time to talk about Visa Incorporated, ticker symbol V, after the company reported their Q2 earnings after the bell. Now, during the regular session, Visa was down by over 4%, but in the after hours, we're seeing the stock snap back a little bit, up over 5.5%. We'll dive into the revenue. We'll dive into the numbers and kind of the earnings mix over at Visa. Some of you might be wondering, well, how is a stock like Visa only down just 9% this year when we saw stocks like Tesla down over that just today alone? Visa's actually held up very nicely. Now, speaking of holding up, I literally did not move any of these lines from our last technical analysis video that we did on Visa, probably just a couple of months ago, and these levels have held. Now, these previous areas were already baked in, but more recently, we're seeing that we are forming kind of a new upper channel here with Visa. Talk about what this means from a technical perspective, because it appears to me that Visa is really trading quite a bit on technicals, but there's some fundamentals baked in there as well. I'll talk to you about what kind of is the tailwind driving this stock up in the after hours and what could potentially be on the horizon that maybe could be a headwind just in case those things materialize with Visa in the coming quarters ahead. But speaking of quarters, this most recent one was fantastic. Revenue came in at $7.2 billion. That was 25%. Hello, growth rate. We just did a video on Google, and I tell you what, this 20% growth rate over at Visa is one of the reasons why you have to pay a big time multiple, at least, in relation to some value stocks on Visas, because you got a really strong revenue growth rate on this one. Now, speaking of growing, that cross-border volume was up huge in the most recent quarter. We'll come over here and we'll show that to you. So our international transaction revenues up 48%. A lot of us can realize why, okay? Over the last, 2 years, you've had international travel really restricted, obviously based on COVID. Those rules and flying without a mask on and all those types of things, well, those have started to kind of lighten up depending on where you're at and what country you're in. And we're seeing that those revenues are starting to snap back. So obviously during the pandemic with Visa, the stock still performed absolutely amazing. I mean, the stock was south of $140 per share and it rallied up over $247 per share during that time. Some of that had to do with investors understanding that this international revenue was going to go away temporarily, but it was going to be offset a little bit by the fact that you had much higher e-commerce spending as well, which obviously requires almost exclusively paying for those items with a credit card like a Visa. So the revenues were offset a little bit, and everybody knew that this day was come. At some point, thank goodness, people are able to travel internationally, and that was up 48%. So the good news with Visa is that you have that as a tailwind. I think a headwind could potentially be if you see a recession happening. Obviously, people might be less inclined to go out and travel, although recessions tend to hurt the people that maybe can't afford a European vacation, but also factoring in that a recession would decline payment volume in general for the most part, maybe, although it could spur some growth with Visa's payment processing because more people would maybe put their expenses on a credit card since they can't afford those types of things. We'll see. There's probably some push-pull when we've got Visa, but broadly, this company's got a lot of tailwinds behind it. I think this international travel will just continue, and as long as the economies hold up well enough, all the other transaction revenue that they generate should stay high. Now, we saw net revenues increase over the last year on a quarterly basis to 25%, up $7.1 billion in the most recent quarter. We'll come over here and look at it from a slightly more detailed perspective in a minute, but I wanted to give you kind of a broader view here. We had net income increasing by 21%. That's because we only increased our operating expenses by 11%. So we had 25% revenue growth, just 11% growth on those operating expenses. That spurred our net income up 21%. And again, our revenue growth at 25%. To grow your net income by 21%, certainly showing you that a lot of those earnings are flowing right down through Visa's balance sheet. It's exactly what you want if you're looking at this from an investment perspective. Now, in terms of their balance sheet, looks fantastic. They got plenty of cash. They've got a little bit of debt. Nothing I'd be really too concerned about over at Visa. We talked about how they had $7.1 billion worth of revenues in the most recent quarter. They were sitting at 5.7 in a year ago period. Year over year, we went from 11.4 up to this 14.2 billion. Those operating expenses barely budged. Oh my gosh, give management a round of applause over at Visa. Visa to go 5.7 billion up to 7.1 billion on the revenue side. And look at these operating expenses, almost exactly the same from a rounding perspective. You went from 2.1 up to about 2.4. You gotta love that. That's gonna bolster up your operating income. It went from 3.5 all the way up to 4.8. I'm in love. Is it Valentine's Day over here, or is it Visa's Q2 earnings? I can't tell, because when you bolster your net revenues by about $1.4 billion and your operating income goes up by nearly $1.3 billion, that is what dreams are made of. We saw a similar type quarter. Honestly, when we looked at Tesla, we saw that a lot of their net revenues flowed all the way down to their operating income. That's absolutely fantastic. Come all the way down to net income, and you see that increase by about 600 million quarter over quarter. On a yearly basis, you went from 3 billion up to about 3.7. That is absolutely fantastic. From a cash flow perspective, you're painting an identical story, because when we've looked at Visa, we note that most of the net income flows down into positive cash flow. So off $7.6 billion worth of net income, that's for a 6-month basis. You'll find that up here. So the right-hand column was a 6-month basis, $14.2 billion worth of net revenues, $4.6 billion worth of cost. That gives you $9.5 billion worth of operating income. You pay some taxes and some other stuff. You get down here to a $7.6 billion net income, again, on a 6-month basis. So you pull down to cash flows, you pull down that $7.6 billion net income number. You get to add and subtract some things. In Visa's case, it's almost a wash in terms of cash flows. You come down here to $7.7 billion worth of positive cash flows. Last year, on a 6-month basis, you were sitting at 6.8. The vast majority of net income that flows into Visa is flowing down to the cash flow line. That is a great business model. It is also being run very efficiently. The management over at Visa, this is what the story of these numbers tell you. This is why you tune into the investor channel, because these numbers tell the story. The people on CNN just want to talk. This actually tells you exactly what's going on with Visa. This is why this has not ever been a cheap stock from a valuation perspective, and also another reason why the stock has actually held up very nicely from its year-to-date performance. With another couple good days in a row, the stock will actually be up on the year. That's absolutely fantastic. They are also, on top of that, from the financial perspective, it's about as good as it gets, and we're repurchasing the stock over here at attuned to $7 million in the most recent quarter. That is double the amount of shares that they rebought in the previous 6-month period. We're also paying a dividend on this one. I think you're buying this, quite frankly, for that dividend growth on the long term. I bought into Visa a long time ago. They keep raising that dividend year after year. That's also why you buy this one, quite frankly, on the dips. Now, from a technical perspective, it's trading like in a perfect pattern. We made this previous uptrend. I'll take these lines out because they're relatively irrelevant now, but I drew these other lines in, and this was not before I recorded this video. These save the charts. I use TradingView. It's not necessarily an endorsement, but I do like this chart platform, and they save your lines. And these lines were intact because we noticed this stock bottomed out down here at 190. That was an area of support really going all the way back 2 years ago, after this stock made kind of its initial surge after kind of the pandemic lows that we saw with a lot of stocks. This stock has bottomed out there multiple times over the last couple of years, right at $190 per share. And we're seeing that we're making really not a perfect series of higher lows, but the stock is starting to move higher. We're seeing now we're closer to this $211 per share. What can you do with Visa if you like to take profits on your stock? And there's a lot of people that do that. They like to buy stocks cheap. Look, buy low and sell high. You can profit take as Visa continues to go back to the top of the range. Now, if you think you've missed Visa, you want to get into this after looking at these earnings and these cash flows, you realize this is a pretty good company. Well, don't worry. I think the stock will continue to walk its way up. We do have some broader market selling, which might put a little cap on that upside, but I could see the stock getting north of $220, maybe even north of $230 per share. But don't worry, the technical pattern that we're making is the sellers will start to emerge north of 220. Once the stock pulls back, I would expect us to get really maybe back to where we are. So if you want to step in and buy the dip on this one tomorrow or the next day, kind of in that 210 range, I wouldn't blame you, but I certainly wouldn't take a strong allocation in this one. If I wanted 10 shares in Visa, I'd probably maybe buy 2 or 3 of them tomorrow if I really wanted to jump in at this price, because it's really not that bad. Because quite frankly, I see this stock walking up north of 220, but then pulling back to probably this 210 range. And so you might as well pick it up now if you like it. The danger is if you break this 200 level, come back and test 190. If you test 190, you could have like a Google-like move, a Netflix-type move, way south of probably $175 per share on a stock like this. So that's your downside when it comes to Visa. But these financials are really good. And if you've got strong international travel coupled by maybe a little bit better expectations on that inflation side, well, I tell you what, a company like this is well positioned to capture a ton of that revenue and those profits over the coming years ahead. That was Visa. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.